This is one of the coolest IRS tax hacks for anybody that's self-employed that will save you thousands and thousands of dollars without having to spend a bunch of money. So follow me this way. Say you're a contractor, you make $100,000 in revenue per year, meaning $100,000 worth of jobs. Your expenses were $30,000 for your cost of goods sold, your basic material items, right? Your profit's 70,000 bucks at the end of the year. So you got to show 70 grand worth of income on your tax returns to be able to qualify for your mortgage, is what your mortgage broker told you. So that's what you go ahead and do. And what does that get? You get an approximate tax bill between Fed and state of approximately 21,000 bucks. This is how I would do my taxes. Once again, no additional money out of pocket, right? Still got our same $100,000 in revenue, still got our same $30,000. But you know what I did? Is right before the end of the tax year, I went out and I bought a new vehicle. Anything over 6,000 pounds that's an SUV or a truck, using a Section 179 IRS tax deduction. So even if I put 0% down on that truck and I have a 0% interest rate, so literally I can do it zero out of pocket completely, buy a truck for 70 grand, even though I'm not paying cash for that truck. I'm financing all of it. I can take that full price that I paid for that truck and as an expense and bring down my taxable profit to $0. So follow me. Really, I made 70 grand. And instead of wanting to pay taxes on that 70 grand, I go out and I buy a new SUV or a truck, something that weighs over 6,000 pounds as a business owner. I then, whether I pay cash for it or finance it, I get the same deduction. Now my CPA has a Section 179 depreciation deduction for the full price of that vehicle. Now my taxable income goes down to $0. So I pay $0 to federal taxes. Save myself 21 grand. And guess what? I didn't screw myself up in getting my mortgage, because with the mortgage, as loan officers, we know a Section 179 deduction is just a paper deduction. So what do? We go ahead and we get to ignore that depreciation expense, and we get 70,000 bucks to help you qualify for a house.